Hi guys, welcome back to another video. My name is Josh, and in this video I'll be covering Interactive Brokers, the share trading platform that is based in the US, currently offering all types of financial products all around the world as well. So this is an interesting platform. It's a really wide scope of a platform. There's basically a lot of things to cover here. So in this video I'll be covering this more from a casual investor or a more retail investor type of perspective rather than a professional or sophisticated trader. If you enjoyed today's video, be sure to like and subscribe. And as always, this is not financial advice, purely for entertainment purposes only. You can read the full disclaimer down below. So let's get right into it. So Interactive Brokers is listed on the NASDAQ IBKR, currently trading at $55 per share. They have a market cap of $23.66 billion. But today we're not doing a stock analysis. We'll be talking about their share trading platform. So Interactive Brokers is an international broker operating in over 135 market destinations worldwide, including New Zealand. They have all kinds of trading platforms, but their flagship desktop platform is the Trader Workstation, and this basically has all the tools you need and are designed for active traders and investors who trade multiple types of products. They also have a mobile app on iOS and Android, so that basically allows you to buy and sell shares on the go. Interactive Brokers provides online direct access to trade in different types of products such as stocks, options, futures, currencies, bonds, and funds from a single integrated account. They are available in 135 markets, 33 different countries, as well as 23 different currencies. Okay, so when I was doing my research for this platform, obviously there was a lot to cover, so I can't cover everything in this video, so I apologize if you don't get what you're looking for, but leave a comment down below and I'll try to answer your questions. In terms of signing up with Interactive Brokers, there's two different types of account types. So the first one is the Interactive Broker Lite, which is not available to New Zealand residents. The Pro account is available to residents. So that is what I'll be covering in this video here. We'll be talking about everything specific to Interactive Broker Pro. And as mentioned before, these are all the different types of products. Now, this is very important. When you're signing up with an account for Interactive Brokers, they will ask you how much experience you have in terms of trading a particular product, for example, shares, options, futures, and so on. They also ask you other questions like your net worth, and basically all the answers that you give them will determine what level of access you have in your Interactive Broker account. And the reason why they do that is because of US law, and the reason being is that some of these products do carry a lot of risk. So yeah, just want to make it clear that based on your response, you might not actually get the full suite of different types of investment products that Interactive Brokers has to offer. Moving on to actually depositing and withdrawing money. As mentioned here, you can deposit money using a New Zealand bank transfer. There is no deposit limit and no deposit fee. When you deposit money into your Interactive Broker account, your money stays in New Zealand dollars, and then you can decide what currency you want to convert in depending on what type of product you're buying. So this is slightly different from what we currently have in terms of brokers like Hatch and Stake, where it automatically converts from New Zealand dollars into US dollars. In terms of withdrawing your money, you can withdraw using a New Zealand bank transfer. Again, there is no withdrawal limit, and they do offer you one free withdrawal per calendar month. After that, it is 15 New Zealand dollars per withdrawal. In terms of commissions, they do operate two different types of pricing. The first one is the tiered pricing, and the second one is the fixed pricing. So tiered pricing is exactly what it sounds like. It is a volume-based pricing, and this essentially means the more you trade, the cheaper it gets. In terms of the fixed pricing is a fixed rate based on a per share or a set percentage of trade value. So I'll be going through these two types of pricings using examples. The first one that we'll cover is the tiered pricing for US stocks, and I'll only be using US stocks here. If you want to know more about the other types of stocks, you can check out that link below. But for US stocks, if you're trading anything below 300,000 shares per month, it is 0.35 cents per stock, as well as a minimum per order of 35 cents USD and a maximum per order of 1% of trade value. and the more you trade, the cheaper it gets. So anything above 300,000 shares and below 3 million shares, it is 0.2 cents per share, and a minimum order of 35 cents and a maximum per order of 1% of trade value. Now, very important, tiered pricing does not include variable fees, including exchange fees, clearing fees, regulatory fees, and so on. In terms of the fixed fees, now fixed fees does include all of the exchange and regulatory fees. In terms of the fixed fee, it is half a cent per share, a minimum of $1, or a maximum of 1% of trade value. So here they have an example. If you're buying 100 shares at $25 per share, the order is $1 because that is the minimum amount. When you're buying 1,000 shares at $25 per share, this is $5, which is basically half a cent per share. And if you're buying 1,000 shares at 25 cents per share, that is $2.50, and that is based on the maximum per order of 1% of trade value. Now, tiered fees versus fixed fees, which one is better? The answer is it depends. Because firstly, exchange fees are not incorporated in the tiered fees, but it is incorporated in fixed fees. And as well as that, exchange fees vary across different types of exchanges. So the NASDAQ will charge a different fee compared to the New York Stock Exchange. And so that does make it a little bit more complicated to calculate. Furthermore, it depends on whether you are a market maker. In other words, whether you're adding liquidity by using limit orders when you buy or sell shares, or if you're a market taker when you're removing liquidity from the market, so basically when you buy and sell at market. With a fixed fee model, it doesn't matter whether you're a market taker or a market maker. And based on the examples provided by Interactive Brokers, the fixed fee is actually cheaper than the tiered fee for lower volumes. And you can look at the examples that they give in the link below. But from what I can see, basically the more you trade, the cheaper it is. And that makes sense because, that is basically what the tiered fee model is to encourage you to trade more frequently. Either way, I think both fees under the two fee structures are industry leading. You're still paying a very low fee compared to the other platforms out there currently. One way that you can figure out which fee structure is better is to open a paper account, basically an account with fake money, and execute trades using both types of methods, see which one is cheaper and use that fee model basically. In terms of the other commission fees that you pay on the platform, there is an FX fee of 0.2% when you're converting your currencies. Options start at $1 per trade. You have mutual funds as well. A variety of non-US mutual funds have no transaction fees, while other funds are priced at roughly €5. In terms of bonds, for the first 10,000 US dollars, it is 0.1%. Anything above that is 0.025%. And you can check out the list of other fees on that website for other types of financial products. Obviously, I'm not covering them in this video because as I mentioned earlier, you might not actually get access to those. But in the case that you do, you can check out the link in this slide here. In terms of the account fees, there is a maintenance fee, which is a standard activity fee of up to $10 per month, less commissions incurred. So this is calculated as $10 minus your monthly commissions that you paid to Interactive Brokers. And here's an example where your monthly commissions is roughly $6. You have a standard activity fee of $4, and it's basically $10, which is this amount, minus your $6 of monthly commissions. Now, if you do have a low equity balance account, so that is defined as below 2,000 US dollars, or a balance maintained in a closed account, then the standard fee is now $20 less monthly commissions. So change this number to 20 and you will have a standard activity fee of $14. Now, if you are 25 or under, then the standard activity fee is only $3 per month. So if you are 25 or under and you also have a low equity balance, then your standard activity fee is $3 per month. So I called them up to confirm this, and that's what they told me. So that is very handy. If you are a relatively young guy or girl, you can sign up for a relatively low standard activity fee. There's a few ways that you can get your account fee waived as well. First of all, if it's your first 3 full calendar months on initial funding. Secondly, if your account has a net liquidation value of more or equal to 100,000 US dollars or non-US dollars equivalent, or if you have total assets across all your account of on average more than 100,000 US dollars, then you'll get your monthly fee waived as well. Moving on to share transfers, Interactive Brokers offers share transfers in and out of their platform supported by ACATS, which is used for US shares, and they also have other methods for other international shares. Interactive Brokers doesn't charge any fees for incoming or outgoing ACATS, but the other party, so the other sending or receiving broker, may charge a fee. So for example, if you're transferring shares from Hatch into Interactive Brokers, Drive for Wealth, which is Hatch's broker, will actually charge you 100 US dollars on this transfer. So that is something to consider because that does seem like a relatively high fee. In terms of the safety of the platform, so Interactive Brokers is covered by the usual SPIC coverage of a maximum of 500,000, and under their excess SPIC policy, Interactive Brokers is insured for an additional 30 million subject to an aggregate limit of 150 million. On a consolidated basis, Interactive Brokers exceeds $8.5 billion in equity capital, over $6 billion in excess of regulatory requirements, and you can check this out because they are a publicly listed company. Interactive Brokers is regulated by the SEC as well as the Commodities Futures Trading Commission, and each of their respective subsidiaries are regulated by the local basically Securities and Exchange Commissions in those areas. So seems to me like a safe platform. Now, if we're looking at the alternatives to Interactive Brokers, the three main ones that I can think of offering US shares are Stake, Sharesies, and Hatch. In terms of the FX fees across all of them, Interactive Brokers is the lowest at 0.2%. Brokerage fees wise, Interactive Brokers beat Hatch because Hatch charges twice the amount, and Interactive Brokers most of the time would have a lower fee than Sharesies based on the percentages, and Stake is a $0 fee, so Interactive Brokers lose to Stake here. In terms of the account fees, however, Interactive Brokers is probably one of the highest ones here if you're not factoring in any commissions and if you're not 25 or under. So that really depends on whether you trade more frequently or not. If you do trade very frequently, then it might be more worthwhile. But if you don't trade very often, then the free account with Stake or Hatch would do quite well. Now, I've done a review on Stake, Sharesies, and Hatch in the link above. Be sure to check that out if you want more details around that comparison. And if you're not sure of whether you should sign up to Interactive Brokers or not, they do offer a free trial where you get a paper account to try out their different tools available on the platform to get used to the traders workstation that they have. Definitely try that out, and you can also use this to test out whether the fixed or the tiered fee is better for your purposes and your needs. But if you do want to sign up with a live account, I do have a referral link down below. I'm not sure if the referral link actually works because when I was going through the terms and conditions, there was nothing to me that would suggest it wouldn't work. But when I called them on the phone, they weren't sure if it was available to New Zealand residents. So use that link with a little bit of caution, but let me know if it does work. If it does work, I'll leave a comment down below updating saying that it works or not. And if it doesn't, I will do the same as well. But when you do use the link, you will get 1% of your first deposit back in Interactive Broker stock. So for example, if you deposit 1,000 US dollars equivalent of money into your account, you will get $10 back of Interactive Broker stock. And so as always, be sure to use that link to support the channel. If you enjoyed today's video, be sure to hit like and subscribe. Share this with someone who is asking about Interactive Brokers. I would really appreciate the help getting this video out there. So hope you enjoyed this video. Until next time, take care.